Welcome back. You're still with us on Startup Street. Arqaam Ventures has launched its second venture capital fund of $180 million. The firm, which has invested in companies such as JAR, CreditBee, Jai Kisan, Jumbotail and Scienzy from its first fund, will look to make early-stage bets in around 20 companies from the second fund. With Fund 2, Arqaam will continue to build a thesis-driven concentrated portfolio by going deeper in its existing sectors, as well as identifying category leaders in promising areas like manufacturing, tech and EVs. Joining us now to discuss this further is Rahul Chandra, the MD of Arqaam Ventures. Rahul, thank you so much for joining us on Startup Street today. Like I said, you've launched your second fund with a target size of about $180 million. When will we see the funds being raised? Talk to us about the kind of investors interested in this round. How excited are they about the Indian startup landscape in the current environment?
Hi, thanks for having me. And we're excited to announce the launch. So this is the third year from the time we closed the first one. We were very fortunate to actually have significant institutional support. And in addition, we had a bunch of large family offices in India backing us in Fund 1. So at this point, when we've announced, we are sitting on 3 years of history of actually following a very process-driven and where we have stuck to the theme that we started off with. So when we look back, we've been fairly diligent in the companies that we've invested in. We've been very measured. So investors actually, especially institutional investors, like the fact that what you set out to do is how the fund has been invested. Mm-hmm. So when they look back at the 3 years, I think there is a lot of comfort in the fact that we are thesis driven and our stage and sectors, etc., fall into the category that we talked about. So where we are sitting right now, we are obviously getting encouragement from our existing investors to call out a fund right now, and there is support around the table. Mm-hmm. And then there is also the India shining aspect right now. India is one of the largest markets in the world. Right. Globally, it is one of the biggest startup opportunities. There is US interest that is shifted from China to India for tech, and that's helping us as well. So there is that tailwind that's going to help us. We're looking at a October 1st close and a end of the year final close. Okay, so October 1st close and end of the year final close. So there's a lot of investor interest in the India story, like you said. So through the fund, you hope to build a portfolio of 20 tech startups. So talk to us about the kind of companies you're looking to invest in. Are there any that are on your radar currently? What will the ticket size of these investments be? So we are early stage investors, so pre-Series A to pre-Series B. And what we're looking for are really companies that have identified a problem and they've constructed the product that will then address that problem. Our target audience is the middle India segment, which is 5 lakhs to 20 lakhs in family income annually. Right. And for them, the sectors that matter, where 80-90% of their wallet share goes to, is food, agriculture, healthcare, financial wellness, skilling, mobility. Correct. These 5 sectors are really square and center for us. And the business models that can achieve scale, because what we count as middle India consumer is about 400 million people who are underserved and they are tech ready. And for them, this digitization of middle India that's happening, that is the driving trend for us. So we're looking for companies and founders who can actually innovate around the India stack, the digital India stack, which includes UPI, Aadhaar, etc. And then build products that are innovating around that. So what we are expecting, these startups to actually deliver on is tens of millions of customers in whose lives actually some of these products are making tremendous difference. So a big opportunity there in the middle India market, but you're also strongly eyeing the manufacturing, tech and electric vehicle space. So what's interesting about these companies and what's the opportunity here? So India is, again, the second tailwind that we are seeing is the India plus one or China plus one, where manufacturing out of India is being considered by a lot of global manufacturers. India has thrived actually on being a more specialized player, which is then where quality can be driven. And there are certain segments of customers out there. Manufacturing in India is in 2 parts. One is manufacturing for the world and manufacturing for India. Both are hugely underutilized at this point. And I think the first wave will be where Indian manufacturing serves India needs, and then it goes to serving global needs. The formalization of the sector is in 2 parts. One is how do manufacturers get access to customers and how does the buying process then convert into a digital buying process? Right now, it's very broken. And the second one is, a steady supply of customers where the capacity planning is done better, where then it leads to more investments and increasing the capacity for these manufacturers. So digitization is working in the manufacturing sector beautifully right now because one, it's aggregating a lot of smaller capacities, shifting demands on an as needed basis. It's also marrying the blue collar workforce, the labor force, which has got different levels of skilling. And the government is actually emphasizing a lot on getting the labor force to go up the curve on skilling.
Right.
But there is no efficient ways of measuring that and no efficient ways of delivering that. For example, millions of workers cannot be taught the same way, just like the EdTech solution.
Right, absolutely.
If they need to, so there has to be technology driving that. So these two are the two exciting things for manufacturing.
All right. And from your first fund, you invested in about 16 new age companies like JAR, CreditBee, Jai Kisan. What are the kind of returns you're seeing? Any exit plans? How's your portfolio doing?
So portfolio, we measure portfolio on a day-to-day basis in terms of the build process, right? Not so much the outcome. And the input side of that, again, is happening. Our founders are really nose to the wheel. Since 21, we have also guided in terms of cash utilization and just stretching the runway. So on an average, our companies have a cash runway of 40 months. We feel very comfortable with how much runway they have to build and markets to turn. Number two, they've raised sufficient capital. So just in the end of 22, we've raised about 225 million in the portfolio. So that again is a testimony to the attractiveness of these companies being able to raise capital in a down market. And I think we break companies into 4 buckets, going all the way from business model to be proven and all the way to being category leaders. So we count about 5 companies in our category leaders where they have taken the pole position in new markets that either they have created or which they have digitized. So companies like Smallcase,
Right.
which are building the full tech stack for ETF, JAR has created the whole saving for Middle India.
Right.
CreditBee is the largest digital lender in the country. Jai Kisan is the biggest agri-fin company. So we are seeing
Absolutely, Rahul.
the appearance of category leaders from the portfolio.
So some strong companies that are in your portfolio, but we've completely run out of time. Thank you so much for joining us on Startup Street today.
Thank you.
All right, on that note, we've wrapped up. We will wrap up the show. Thank you very much for watching. It's a goodbye from Arundhati and me. But stay with CNBC TV 18 for all your latest news and updates.